But let's go back to that conversation around Interglobe Aviation. Now, the company's co-founder Rakesh Gangwal sold about 5.7% stake in IndiGo airline parent Interglobe Aviation for almost 12,000 crore rupees yesterday. This is the sixth large chunk that he has sold since 2022 via block deals, and now he has just under 8% stake in the carrier. Now, how should investors look at the rise and rise of Interglobe Aviation? Almost a five-bagger in the last 5 years. Jinesh Joshi, research analyst at PL, is joining in. Jinesh, thanks for joining in. You know, Interglobe is one of those stocks that has probably many people feeling FOMO, because the narratives always were that, you know, it's too closely linked to the volatility in crude prices, taxation could be changing, it's a sector that could be controlled by government at any point in time. Generally, they say globally aviation doesn't make money. Interglobe has defied all of these concerns. Your thoughts, and whether now there's any point looking at it at all, or is it too late? The party's, is it ongoing? Is it close to getting over, or has it just started?
No, definitely it's not over. So, I mean, if you look at the pricing power of IndiGo, I mean, if you look at yields over the last 3 to 5 years, they have been in the band of about 5 odd. In fact, even in this quarter, I mean, if you look at the yield, it was up by about 2% versus their guidance of about low single digit moderation. So, as long as the pricing power stays and the fact that the AOG is expected to come down in FY26, which is hovering at about 40 odd currently, we think with the improvement in the cost structure, and if the pricing power remain intact, you will see the journey of upside continue from here on. Obviously, the month of May will have some bit of negativity come through because of the geopolitical tensions. But I think these are all near-term aberrations, and we believe that the upside should continue from here
on. What's your target?
So our target is about 6,100 on the stock. We value at about 11 times September 26 EBITDA.
Okay, yeah, and so you're in sync with targets on the street. I'm just reading out the targets. Citi's got a buy call, 6,500. Morgan Stanley's got an overweight, 6,500 again, 6,502. Jefferies buy 6,300. PL, we've just heard another target of 6,000 plus. Investec is the only one who has a sell call with a target price of 4,050. And they're saying that the Mahakumbh and the Pratt & Whitney compensation tailwinds, I mean, they'll phase out in this year, which is why they're an outlier. They're perhaps the only bear in town. But otherwise, targets are still north of 6,000.
But they're not sky high, on the bullish side even. This is
still about 900 to 1,000 bucks from
10%,
where we are.
12%, 15. I mean, max 15%, right, on the upside.
See, that's a bull market. 15% is not enough.
Go big or go home. Anyway, jokes aside, just a quick word on some of the basics, Jinesh. Two things. One, how many new flyers are coming in every year? New flyers. Do we have that data? I mean, what's the rate of growth in this market? And the second is, will competition? Do you think it'll get its act together? I mean, the Tatas. There is, of course. Then there are the other ones, but it's much smaller. That'll take time. What is your sense?
Yeah, so as far as the new flyer question is concerned, if you look at the month of April, we saw about the domestic passenger growth being at about 8.5%. Even historically, if you look at the numbers since the last couple of years, we have seen a mid-single digit kind of a growth in the domestic passenger traffic. So I think that is a pretty good number to look at. Even if you look at their guidance in terms of new plane additions, they are guiding that they'll add about 1 plane each week. So even that is a very good number if I were to think through from a long-term perspective. So overall, I feel in terms of the number of flyers, definitely we are seeing good guidance from their side.
And what about competition?
Competition, oh yeah, sorry, I forgot on that part. So see, if you look at the current market share, it is at about 64%. When IndiGo was at 60%, I think Tata's put together were at about 20-25%. And you had SpiceJet at about 5% and Akasa at about 5%. And then there were questions that from 60%, from here on, the journey could be a bit difficult. But from 60, they were able to kind of claw back their way to about 64 odd percent. From here on, domestically, no doubt, the competition competition is stiff because the other players are definitely are now much better in a much better position than what they were earlier. So to that extent, yes, a competition has slightly heated up, but that is why, I mean, if you look at their overall trajectory in terms of expansion on the international side, I mean, they have about 30% of their ASKM on the international side currently, and the long-term picture is to take that number to about 40%. So international definitely will provide them wings as far as competition is concerned.
All right. Hi, Jinesh. Good morning. Good to see you. When if people are going to fly more, they'll require more luggage as well, right? I think you track the luggage space as well. What's your take right now? You've been quite optimistic on VIP. The stock has been a big underperformer, but it's bounced phenomenally from the recent lows. Your view on the luggage space and view on both these two names, VIP as well as Safari.
Sure. So if I look at this quarter, I think the performance was subpar. The EBITDA margin was at about 1% odd. The top line growth was in the negative territory. But if you look at their overall cost structure, we have seen quite a bit of improvement come through, at least in 3Q is what we had witnessed in 4Q, that structure got elevated a bit, and that is why you saw the EBITDA margin succumb to about 1.5%. But from here on, with some kind of price hike that is being taken in the e-com channel, the fact that they are focusing more on premiumization from here on, and if you see some kind of growth come through in FY26, even if it is in a mid-single digit kind of a territory, and if the gross margin improves to say about 48-49%, if you look at FY25, they were somewhere closer to about 46-47%. You can see some kind of an improvement come through in terms of the overall performance and obviously the stock price as well. Safari, I mean, yeah, this quarter they did well. I mean, the gross margin was at 49% despite the competition that we are seeing. Even Samsonite has become very aggressive on the mass side, whereby you are seeing certain ad for convenience come through in IPL as well. So despite a stiff competition, a 49% GM definitely is very commendable. And the fact that now they'll have their new plant operate at full capacity in the next year, at least in the initial 6 months, there could be some minor hiccups. But overall, I think 26 for them could definitely be good, given the fact that their new plant at Jaipur will kind of start kicking in.
Jinesh, very quickly, just to wrap up back with Interglobe, just leave us with the key numbers to watch. For this year, what is the kind of top line growth and yields, which were as high as, I think, 5.3% as of Q4, because there are some brokers indicating that yields will soften in the coming quarters. Where do you see yields this year stabilizing? And the EBITDA margin was, I think, 31% or so. Where should these metrics be in FY26, since you have a bullish call?
Yeah, so if you look at FY26, our top line growth is about 10% odd. So they should be at about 88,000 crores in terms of top line. As far as yield is concerned, see, they ended FY25 with about 5.2, if I remember right. We do not expect much improvement from here on, given the fact that competition is already stiff. So we are at about 5.1. But the improvement will come in the cost structure, given the fact that their damp lease count will come down as AOGs are expected to decline. So an improvement in the cost structure will kind of help improve their EBITDA margins. We are at about 25-26% as far as EBITDA margins are concerned, and our bottom line estimate for FY26 is somewhere around 9,200 crores. So yeah, these are the broad numbers for IndiGo.
Okay.
All right. We'll leave it there. Thank you very much for joining us. It's a pleasure, and we'll speak again as we continue to track the journey. And it's been, a strong one at that. Let's just